The unfortunate things that happened in the last 2 years of crypto is this narrative that Bitcoin uses too much electricity showed up. Reality, total Bitcoin mining uses less electricity than hair dryers or Christmas lights. It's not zero. It's certainly a significant amount, but it's a fraction of global power supply. And so, when you think about if you were the master of the galaxy, you would allocate electricity to things you think are valuable. Like YouTube uses a lot more electricity than Bitcoin mining. Listen, I think YouTube is an unbelievable innovation and it deserves some electricity budget. And so it's Bitcoin, because it can exactly specify how much electricity it uses and it produces those reports on a monthly basis. The community says this is what has gone into mining. It's an easy target. But it shouldn't be a target. And so, listen, we are moving towards a greener footprint because I think all companies should. But I don't want to, in essence, condone the fact that I feel like Bitcoin is being singled out as an industry. Listen, revenue is coming down in the industry. The volumes are down. Excitement is down. In this winter could last longer than people think. It might be shorter. It's hard to predict when these crypto winners, how long they go. We're a couple years from a halving cycle. I do think the Fed flinching creates some enthusiasm around Bitcoin as a store of value, Bitcoin as a recession, as an inflation hedge, as a hard money when the rest of the world keeps printing money. But we're going to manage our business to what we think is a rational revenue stream for our 5 operating businesses, is try to keep the balance sheet separate. In some ways, this is the most challenging macro environment for any investor. And if you had all the foresight of the sages, you would have just been in US dollar cash all year long, right? When the whole world was saying cash is trash, was time to just go long 1 week T-bills and wait, or go short markets. We're in a mess globally, right? Japan has got a monster imbalance intervening in the currency market while supporting an interest rate market as inflation slowly creeps higher. That is a potential real problem. You saw what happened in the UK, and they're trying to get this genie back in the box. But once confidence breaks down, it's really hard to get it back. And so what the Fed is doing is trying to preserve confidence in the US system. Now, what they need, and we'll see if you get it, is a Congress that is willing to take some pain. Politicians are not normally coded to take pain, right? So you already see in France, hey, we're going to do $100 billion subsidy because energy prices are too high, and hence that's driving inflation. So we're going to give more money to the system. Like, that's counterintuitive. I understand where it comes from. People are suffering. But as you use printed dollars, or printed euros in this case, it creates this inflation cycle. And so it's a really treacherous market. Could the S&P, what's at 3,600 today, could it end the year at 3,300, 3,000, 3,300? Kind of looks like where the chart would go. What's hard about these environments is they don't get there in a straight line, right? There is a tremendous amount of fear in the market right now. And so, like on Monday, we already saw a 6% rally and it got reversed. It doesn't feel to me that the stock market low is in, that we're going to have more pain before we see clear sailing. And, there is a chance that even when the Fed thinks it's finished, they pause. If the federal government doesn't tighten its belt and starts feeling this populism surge, the cycle picks up again. And so I would say for now, until the next, until further notice, at least 12 months, these are going to be really complicated markets to trade and complicated markets to make money in. And in some ways, just preserving your wealth is a huge win, right? Not actually having monster gains, but not losing money could be a huge win.